Okay, guys, here we go. Topic of our lesson today is Vwap, and Vwap is volume weighted average price, and you all know that I'm using it all the time, and this is one of my important tools. And there are, of course, several indicators that I think most of you or all of you should use. Vwap is one of them. Now, years ago, I would probably use many more indicators than I do now. Right now, the most important and most interesting indicator for me is the Vwap, volume weighted average price. Now, I'm not saying that you're not supposed to be using other indicators. I am personally not using other indicators, not because a trader should not use them, but because I personally don't need them anymore. Like if you would ask me about the pivot points and everything, I don't need to look at the indicator to know where they are, and I don't need to know, and I really know the way that the stock moves according to these indicators without really taking a look at them. But the Vwap is very important to me, and I want to keep it on my screens all the time. So when I'm watching something, like take a look here. Here is, let's just put, I don't know, Apple. Here's Apple. When you're looking at Apple, take a look at yesterday, for example. The red line over here, that's the Vwap. Now you should look at your screens above and to see what I'm pointing. You should all see my marker, and here it is. That's the Vwap. And what I'm claiming is that the Vwap is the point where the stock should most of the time go back to. Now it depends on what stock, what volume, what is happening during the day, whether it is in the first 30 minutes or so or later. I'm usually taking a look at the Vwap just after the first 30 minutes, and I'll explain that in a few minutes. But so somewhere around here, again, the claim is that Apple should move back to the Vwap all the time. Now, you see it move at the beginning of the trading day up and then moving down back to the Vwap, moving a little bit down back to the Vwap, and all of the time you can see that the Vwap is very, very important here throughout the day. Now this is just one stock. I don't know, let's just, I don't know, Visa. What happened to Visa yesterday? Here's Visa. Same thing. You see that? Vwap, and then the stock moving back to the Vwap. Now, Visa, for example, right now is underneath the Vwap, so I'm claiming that it should move back to the Vwap, and so on and so on. So again, let's go and show Apple again. Now, you may have questions. You should probably write them down, and we'll discuss them later. But let's start with the basic: why Vwap, and what's the idea behind the Vwap. So, firstly, the Vwap was invented in the 1990s, really. Now, it wasn't in much of use until actually 2003, where it started being used. But before that, it was there, but it wasn't really used as much as it used since 2003. Now, with the basics, let's go on the basics. Let's take a look at the whiteboard. You're supposed to be seeing the whiteboard right now, do you? You see my whiteboard? You do. Okay.
Yeah.
So let's just imagine. Let's just talk about stock, and let's say let's just paint a chart here. Excuse me, it doesn't look that great, but let's just point up some prices. Let's say that it starts at $30 and moves up. At the beginning of the trading day, right over here, let's say there was just one trade at $30. I want to explain to you right now what is the Vwap really. So let's say we have a trade right now at $30, and let's say that there were 100 shares traded at $30, which is right over here. So the price of the share right now is $30, and the first trade is right over here. The first trade is $30 at 100 shares. Now let's assume that we have another trade here. That's the second trade over here. Okay, and this trade right over here let's assume the price here is 30.10, and let's assume that there were 1,000 shares traded at this point. So we're having two trades. It can be just a few seconds apart. I don't care. Or let's just assume it was 5 minutes apart, or whatever. So the first trade was here at $30, 100 shares, and the second trade was here at 30.10, 1,000 shares. What's the average price of the stock after the second trade? What is the average price of the stock? And hi Shlomo, I see that you're in the room. Welcome. Right, the average price of the stock is 30.05, right over here. That's the average price of the stock. Okay, so let's point it out. Just 1 second. Here it is. So the average is 30.05. Absolutely right. We had one trade at 30, the second trade at 30.10. 30.05 is our average. But does that really, is this really true? When I'm looking at the price, I'm seeing that 1,000 shares were traded here and 100 shares were traded over here at 30. So if I'm looking at let's call it the fair price of the stock, the fair price. What would be the fair price? If 100 shares were traded here and 1,000 shares were traded there, I don't think the fair average price, and it's not the mathematical average, I'm talking about the fair average, that shouldn't really be 13.05. Absolutely right, Nick. The average, if I take into consideration the volume, is 30.09. And how do I come to this number? That's very simple. You don't have to remember this, but if you just multiply $30 by 100 shares, and you will add to it $30, actually the 30.10, and hold on, 13.10, and you will multiply it by 1,000 shares, then you will get, okay, and you will actually get, hold on, somehow it stopped writing. So it will be 33,100. And if you will divide 33,100 to the total volume, and let's write it here, that's 100 shares and 1,000 shares, that's 1,100 shares. So if you will divide 3,300 by the volume, then the resolution is going to be 30.09. So that's it. That's a number. So I claim that the fair value of the stock is really not 30.05, but 30.09, because 30.09 takes into consideration the fact that at 30.10 it was traded at 1,000 shares, and at 30 just 100 shares. So why is that so important? And we'll talk about it in a few seconds now. Well, firstly, we need to understand that institutional traders are responsible for 80% of the volume of the stocks in the stock market, the stocks that we're trading, 80%. And again, I'm not talking about penny stocks or stocks which we consider small caps under $10 and so. I'm talking about real stocks that are over $10, high volume. 80% of the volume the institutional traders are responsible for. So now I want to disregard the public, which is us really. We may be traders, but I want to put away the public, disregard the public. We only constitute just 20% of the stock volume. So I want to be talking about the institutional traders. Now, the institutional traders, well, we usually talk of them as a whole, big companies and so on, but really they are individual traders who are coming into work every morning, and by 9 o'clock they have a morning meeting, and they tell them, you should buy, for example, one of them is responsible on buying Apple. So somebody will get an order to buy 500,000 Apple today or in the next few days, and the second one in a different company will be ordered to sell 1 million or 500,000 or whatever Apple. So there's one buyer and there's one seller, and all of them are being told, the one who's buying is being told buy cheaply, and the one who's selling is supposed to be selling at high prices. So really, both of them get orders, and the big question is, how much is expensive and how much is cheap? How do you define really cheap and how do you define expensive? So, well, if he would have sold everything the same day, you would have known that what is cheap and what is expensive. But the guy who bought 500,000 Apple, let's say yesterday, bought it for a client. The client ordered the company to buy for him 500,000 shares. So this guy walked into the trader, let's say he works for Goldman Sachs, walked into his office, he was told to buy 500,000 shares, he's buying them. Big question, did he buy it high or did he buy it low? The shares are going to be sold in a few years maybe, so nobody really knows that, other than the calculation of the VWAP. And this is why the VWAP is very, very important. We need to know intraday, even though the stock was not sold at the same day, if the price was high or if the price was low. So this is where the VWAP is coming in to help us, because we need to have some kind of an intraday definition of what is high and what is low. So when we're trading the VWAP, we are getting what we call again the fair price. So the fair price is not the mathematical average, it depends on the volume as well. So this is where the VWAP is helping us. Now, traders are being told always beat the VWAP. They're supposed to be beating the VWAP. They're supposed to be, if they are buyers, they're supposed to be buying below the VWAP. If they are sellers, they're supposed to be selling over the VWAP. Like if you're a trader and you're selling 500,000 stocks, probably better sell it right over here. Or if you're a buyer and you're supposed to be buying for somebody's stocks, then most probably if you buy over here, you get a they will appreciate your work more. They won't just appreciate what you're doing more, they will also pay you bonuses. And this is maybe the most important thing, but actually it's the only important thing here. Now, you should know that institutional traders are usually being paid on a % commission on the stocks that they are buying. Like if you would buy one stock of Apple, they would usually be paid, this is the going rate, anywhere between 2.5 to 3.5 cents, approximately 3 cents per share. That's what, let's say, Goldman Sachs is getting from the client who ordered them to buy 500,000 shares of Apple. Now, the client is very much interested, of course, that the price will be low. So they have some kind of definitions, how low did I buy, and what you're supposed to be, and what kind of bonus you're supposed to be paying me if I did buy low. For example, if the trader comes into work and he buys everything over the VWAP, and again, when we're looking at the stock price over here, half of the volume was over the VWAP and half of the volume was under the VWAP. So if he was buying over the VWAP, that's no more than the 3 cents is supposed to be getting. But if he will buy under the VWAP, then he may have bought it, I don't know, 50 cents or $1 lower than the VWAP. Now, if he did buy it lower, he's going to get more, is going to receive a bonus. Now, the bonus usually is something up to 12 cents, which is quite a lot. Think about getting just 3 cents for buying the stock, but another 12 cents for buying it at a low price. So if he bought it half a dollar lower, he may get a 12-cent bonus for the fact that he bought it lower than the VWAP. This is why the VWAP is very, very, very important for the institutional traders. Now, of course, it's not just that the client is paying them bonuses for buying over the VWAP, or another client who's interested in selling is paying them bonuses for selling over the VWAP. It's the bonus that the trader is making at the end of the month. So this guy who came into work this day, and he bought and the other one sold, let's say the buyer is being paid personally some of the $12 that Goldman Sachs is getting. Like, I don't know, maybe you'll get 5 cents out of that. I don't know. I really have no idea. So he has a lot of incentive to buy under the Vwap, and when the price moves back to the Vwap, he will probably stop buying. Now the sellers will start selling over the Vwap, right over here, and when the stock is going back to the Vwap, they will stop selling. Why would they stop selling here? No bonus. It doesn't go into their salary. They'll just wait for it to move back up and start selling again. It moves down, stop. It moves under the Vwap, they are not selling. It moves over the Vwap, they start selling. It moves back to the Vwap. It goes up again, they start selling. It moves back to the Vwap. Why? Again, because these guys are 80%. Oh, I'm sorry, you don't see this. So stupid of me. Go back to the desktop sharing. Yeah, now you see it. I'm sorry. I was supposed to be showing this. Here's Apple. Okay? And let's do it again. This is the Vwap. And this is Apple yesterday. And think about the seller who sells here, and the seller who sells here. The seller who sells here, when will he stop selling? Right over here, no bonus. Then he starts selling here, stops here, no bonus. Price goes up again, he starts selling here, there's a bonus, no bonus. Here it goes up again, he gets a bonus, no bonus. And the same thing works for the buyers. The buyer may buy here below the Vwap, but then when the price moves up, no bonus. Only the sellers are now selling. So again, when I'm talking about what the institutional traders are doing, the institutional traders are actually working for themselves. They are getting their salaries, they are getting their bonuses, they are interested in making money. They don't care about the trend, they don't care where the stock is going, they only care what goes in and out of their paycheck at the end of the month. So really, for them, getting the bonus when they buy low is very important, and Apple was not for a long time yesterday under the Vwap really. So when I'm thinking about what the buyers could do yesterday, maybe the guy who was told to buy 500,000 shares would just wait for today to buy under the Vwap today. So that's a different story, of course. I mean, it's not just the same day, but it goes on for a few days, and I don't know who is the buyers, and I don't know who are the sellers, of course. But if the Vwap is affecting their salaries, this is really what's important. This is really what's important, and that's it. It goes into the salaries. Now, it all started in 2003, really, when they first really recognized the importance of having some kind of a standard on how to pay their traders. Because again, you want to give a bonus, you want the trader to buy low, you want the seller to sell high, but the big question is, of course, how do you do that? How do you give them the bonus? And the Vwap is the indicator that really solves this problem. And everybody knows how to pay now. Now there's a lot of programs, algorithmic platforms, they are all geared into promoting the activities that has to do with the Vwap. You will see a lot of algo traders who just try to beat the Vwap. They will buy below the Vwap, sell over the Vwap, and so on and so on. A few more things that you need to know. You don't look at the Vwap at the first 30 minutes, because the first 30 minutes you don't have enough history. And again, you're taking each and every trade and the average price, and you're multiplying it and dividing it to the total volume, as I indicated before, as we saw before. The first 30 minutes don't count. So it starts being interesting right over here, for example, at 10 o'clock. This is where it gets most interesting. Now, institutional traders usually are done somewhere around lunchtime, even before that. They usually buy and sell the first 90 minutes. So it's most important somewhere around here. Now, it's not that it's not important later, but it is most important at the beginning of the trading day. This is where Vwap is very, very important. Now, Vwap does not, will not do you any good if you're trying to trade a big mover. Like if you have a big mover, and we've seen a few of these today, like YRCW, it doesn't really count. And let's Just take a look. Wow, YRCW. What a pullback. Look at this pullback at YRCW. Absolutely amazing. Okay, haven't seen that till now. But anyway, when you're looking at YRCW, here's the VWAP. It doesn't really count. Now, yesterday was a different story. Look at how YRCW always came back to the VWAP yesterday. But today it doesn't count. YRCW is right now down 12%. Look at that, 13% really. We're down 13% right now. And you can imagine that institutional traders do not go out and start buying stocks that are down 13, and actually it was 20% down earlier. They don't go out and start buying and other are selling. They are just sitting on the fence and taking a look. They are not really getting into this mess. You never buy the first day down. They will never do so. So we shouldn't do so. So really, YRCW could be very interesting, but an interesting trade. And we had a great trader today. But really, you can't really put into work the VWAP today because of this very big move. So institutional traders are not very active today. It's more like traders like us. I'm not saying they're not buying and selling, but they will be buying and selling for different reasons maybe, and not because of the VWAP. It has a different, they get a different perspective of what's going on today, and it has nothing to do with the VWAP. Okay, any questions about the VWAP? Because I'm just about down now. Again, you should know that the VWAP is very important for us as traders if we know how the institutional traders are being paid. And here I come back to Apple. When you're looking at Apple and how Apple moves, and if you know where they're being paid and when they get the largest bonuses, then you need to understand that this is a very important mechanism, a very important indicator for us traders. And so you should look at VWAP. Of course, you have that in the Colmex platform. I don't know if you have it in other platforms. Of course, you do. You do in many platforms. So, but one thing, make sure if whoever your broker is, just make sure that you get the VWAP. So if you have any questions, that's probably the good time to ask. And anyway, I'll start talking a little bit about the trades that we had today. No, it's not only for blue chip companies. Absolutely not, Russell. I mean, we are trading everything which is north of 1 million shares a day. So I would say anything higher than 1 million shares a day, and this is 95% of the stocks that we're trading. Actually, maybe 100% of the stocks that we're trading. That would be the VWAP would be very interesting in that. When you are having more than 1 million shares a day and the stock is over $10, then not considered small cap. Under $10 is small caps really, usually. Then the institutional traders are involved. They get to be involved over $10, and they get to be involved over 1 million shares a day. There are, of course, some institutional companies there that buy stocks which are lower than $10 or lower than 1 million shares a day, but the game starts at those which are high volume, because there is where you get 80% institutional traders. And of course, I have put in beside those 20% of us traders really, or just really, we're just a small part of the market, but let's call it private investors, because I don't really care about them. I just need to imagine that the stock is moving according to 80% of the volume, and it's good enough when I'm seeing a move that has to do with 80%. I don't really need to think about the 20%. Okay, good question, Piero. And when I'm looking at Apple, should I short it here and buy it here? Should I short it again and buy it, let's say, here or whatever? Answer no. Now, it may sound weird right now, because I just explained to you that this is exactly what it's supposed to be doing. So why won't I play this game with Apple and short and long throughout the whole day? First of all, because it is just not my style. Second, let's just assume that let's assume I was long Apple, okay? Let's assume I bought Apple over here. Okay, it moved up. I didn't, of course, and it's not a valid trade, but let's just take a look and imagine something, okay? It moved up and then moved down, and I saw this nice reversal over here, so I bought, and it moved up here, and I was thinking to myself, well, I was hoping, let's say I had 100 shares, I was hoping it will break over the highs, which it didn't, and then it is moving down. So where would you expect to have the support? That's my question, Piero. Where would you have to expect the support? Would you expect to have it at the Vwap? Well, probably the answer is yes, because you know that the institutional sellers would stop selling at the Vwap. So I'm looking at the VWAP really as a point of a level, exactly, Nick, as a point of level of support and resistance. If I'm looking at it on the stock over the VWAP, then I would expect the VWAP to become a point of support. And if it's below, then I would expect it to become resistance. Of course, it doesn't always work, but that's one of the tools that helps me decide whether I should move in or out, where would I have my support or resistance? And I am not playing this game. Some algo traders do, some traders do. This is, by the way, one of the ways to trade the market. It is not my style. Doesn't necessarily mean it shouldn't be your style. It is just not my style, and I've never done this. The ones who are buying at the levels which are away from the VWAP, Nick, is those guys who are being paid for it. If you were being paid to buy here Apple, you came into Goldman Sachs, let's say you work for Goldman Sachs, and they told you that you're going to get a 12-cent bonus if you buy lower than the VWAP and not just 5 cents under the VWAP, just lower than the VWAP, then you would be paid. Now, by the way, it's all automated. If the trader clicks a button here, and let's say he bought 1,000 Apple over here, and the computer, it's automatically calculates the number of shares he bought. It goes into the report for the client. The client who ordered initially to buy 500,000 shares is getting a report. Someone clicked the button here, he bought 1,000 shares for you, it's 50 cents under the VWAP, the bonus is, let's say, just 8 cents or whatever. So, and the same report goes into your salary. So every time you just click the button, nobody has to watch you, nobody has to ask you at the end of the day, how good did you do? They only check if you were under the VWAP or over the VWAP. So you will be considered a great trader if all of your trades will be under the VWAP, if you're buying. And you will be considered great if all of your trade or most of your trade will be over the VWAP and how far from the VWAP. And of course, knowing to be away from the VWAP is very, very important for these traders and of course for the end of the month salary. And if they try to be too long away and the stock just didn't move there and they are ordered to sell 500,000 shares and they didn't complete their job for the day, that they just sold 100,000 shares. It's not a simple game, by the way. If they were selling just 100,000 shares because they just waited a little bit too much, then they will have to do the same job tomorrow, and they will be coming tomorrow to work, and their manager would probably say, but you have another job today to sell another 500,000 shares in, I don't know, Visa or something, and you also have to complete, you also have to fulfill your targets. You were told to do it in one day. You're supposed to be doing this, so it's not an easy game. It's not really an easy game. Although it sounds easy, it's not. You have to maximize the profits when they're buying or selling, actually, the entry price. Everybody drives the price higher, Mark. Some buyers would buy it even though the market is moving up. If you have an order to buy 500,000 shares today and you have to complete it today, you just may not have a bonus, but you will buy the 500,000 shares today because you were ordered to do so. So in a strong market, institutional traders are also involved, but in a different game, that's all. And we just saw an example of price moving down, same idea. Eliab, you're supposed to be buying below the Vwap. If you buy below the Vwap, which means you bought lower than where 50% of the traders are. I would say W4, if it moves down approximately 5% or so, don't look at the Vwap, and depends if it continues or not, or start consolidating. Somewhere around 5% is the point. Depends on what kind of gap, Chris. They will be involved. Depends on what kind of orders they have. Client may call them up and say, it moved down, I don't know, the price of something that I'm holding moved down 15%, just sell everything. So somebody would just sell everything. That's what the client ordered. You don't really know that, really. No, swing traders don't look at the Vwap on daily basis. They do look at the Vwap on the intraday. So if I think this is what you asked actually, Nick. Yes, if you're a swing trader, you should be looking at the Vwap intraday to decide where you're supposed to be buying. But you don't always do that. It depends on what the stock is doing, how the price is looking, technical analysis. So you really have to take a lot of things into consideration. Some gurus are saying buy above the Vwap. I would like to meet a guru like that. An interesting guru. Market is holding near the lows. Okay, let's just take a look at some of the trades that we had today. And again, it's all in the announcement. So we see all the trades that we had today right over here in the announcement. So they're all here. Just click on the announcement tab. This is general chat. This is the announcement. And here you're supposed to be seeing everybody chatting. But I'm just saying this for those of you who don't really know the room. Anyway, I posted the FDO early today. I didn't take it. FDO was posted. I know M took it earlier, but just take a look at that. I missed it. I missed the point really, but I didn't take it. But FDO was posted under 62.17. Just take a look at here. That was approximately the entry price 62.17, and it had quite a nice move. I know that M took it. I didn't. He didn't take it here. I think he took it later. But FDO was an interesting trade. Second one, YRCW. Now we traded YRCW on a move under 1650. Now 1650 is over here, and this is just a classic trade that we like to do in the room. We're seeing the price move down. It was 10% down. It still is, by the way, 11% right now. And we're seeing a nice upside move, and then a little bit of consolidation, moves down, and we just took it under 1650, which was absolutely a great trade. Look at this move, 1650, more than $2. Didn't quite get the $3, but we did have the $1 sound and the $2 sound over here. So that's a 14. Actually, it was a $16 stock, but it ended up at the lows at $14. And just take a look at that, an amazing trade in YRCW. And then we had BBBY. Did we have that? Over 69. Right. Yes, of course. That was the pullback. Didn't we have another short? I can't remember. Okay, can't remember. I think we had another short. What was the second one we had? Hold on a second. I'll take a look at my trades. What was it? Anyway, BBBY, we were looking for, oh, of course, 70. First one was short, 71.50. Absolutely. Thank you. So, again, 71.50. Same story, BBBY. Let's take a look at 1 minute candles. It will be clear. 71.50. Here it is. It initially moved down, but then up. And we never short something which is moving down. We always look for a pullback. We always look for a pullback. So we had a pullback, it moved all the way up to 72 something, and then 71.50 right over here when it starts moving back down. Just the same as YRCW. We love these trades, we just love them. And look at that, it's just on the lows right now, all the way down to $69. And we also had a nice pullback in BBBY where we took it long over 69.90. Now let's take a look at 5 minute candles. Hold on a second. It's 5 minute candles. 69.50. I think it was here. 69. So 69.90. It moved all the way here. Well, that was just about a 30 cent move, but it was nice. We made some money here too, and it does move down now again. And I'm sorry I didn't short it again, but it is absolutely, of course, too late. So YRCW and BBBY short were just great, and then we had another long in ENDP. We took a pullback, and again ENDP moved down quite a bit, and we were waiting for a pullback. 68.20, quite easily. 68.20 right over here, and it moved all the way to 68.90 or so. I moved out of my last quarter, even less than a quarter, over here somewhere. So it was a great trade for me. And didn't we have another one? Can't remember. Anyway, it was a great day. And I will just stop my lesson here because it's being recorded for those who are not in the room, and I'll just post it later anyway. Thank you for being here with this lesson with me. I'll just stop the recording now.